Hey guys, welcome. Today I have something really important to share with you. And we're going to talk about something called cost segregation. Okay, cost segregation. Now, first and foremost, cost segregation is something that has been around for a pretty long time. But as of recently, it's become something where people are becoming more familiar with it. And honestly, it's one of the best reasons why someone should be a real estate investor, honestly, like an active real estate investor. And so one of the biggest issues that people have is having to pay taxes. You know, that's a big thing. That's where a lot of income goes or flows to, is taxes. And whatever you can do to offset your taxes, the better off you will be. So one strategy that our government and IRS has made available to investors is called cost segregation. All right, it's been in the tax code for years, and let's just kind of dive into it. I do want to let you guys know about a resource later on, or actually further below. You can look into this. We've actually had the pleasure and the honor to chat, online with a great professional and a representative of a company that is well known in the investor space, in the real estate investor space, when it comes to cost segregation. So if you want to learn more about that, if you're interested, if you really want to dive deep and get a better understanding of how you can essentially earn more money, acquire more assets, pay less taxes, keep more money for yourself, and continue to build that generational wealth that everyone desires and that really that everyone needs when it comes to legacy, listen clearly and we're going to dive into it, okay? So first and foremost, cost segregation. I'll put it to you very plain and simple. You purchase a property, okay, and you get to choose how you are going to depreciate that asset. One of the benefits with machinery at times, but most of the time, one of the benefits with acquisitions, especially real estate acquisitions, and sometimes even some machinery, is that you have the ability to accelerate that depreciation, okay? And so for those of us who have had accounting, in school or in college, whatever, we talk about, forward line or straight line depreciation, right? Well, in this case, it takes the straight line depreciation and allows you to offset it on your income, and a lot of times from your rental income, so that it shows up that you actually have a loss in many cases. So let's say that you go ahead and purchase a building for, let's use a number of $1 million, right? So here we are, $1 million purchase, okay? You made this purchase, let's say December 30th of 2019. So for that year, you file your taxes for that year in April of next year. So for that year, you can decide how that $1 million is going to be depreciated, right? So of course, in school, we talk about the forward line depreciation. And so what that looks like is this. So commonly, if someone has a mortgage, and the mortgage, a person will go ahead and depreciate, a certain amount every 30 years. Well, what you can do with cost segregation is that you can choose to depreciate this entire $1 million as a write-off, or basically it lowers your taxes. You can sink that cost right into year one. You can sink that cost into year 5, or if you choose to, you can sink that cost every decade or so, right? Until you have actually depleted that purchase. Now the truth is, you're going to have an engineer, a CPA, et cetera, to help you out with that. We have a CPA that helps us out as well. But you're going to have to also get the value of the building and the mechanics and the good stuff that makes a building. What is it valued at? And the land piece, you're not always going to be able to, most of the time, you're not going to be able to even use the land value. So it's really just off the building value, right? And so once you get that evaluation of what that is, sometimes it may be 80%, right, of this purchase price, then now you're able to accelerate that depreciation. And in a later video, I'm going to share with you guys an amazing plan that we have shared with our clients on how to use cost segregation to also not only offset some of those tax liabilities, but a really great strategy that they can use to accelerate their wealth. All right, that's it. Talk to you soon.